In this video, we're going to be seeing whether or not the 𝗓𝗏𝗏𝗍 ecosystem can repeat the success of the Virtual's Genesis launches that we've seen over the last few months. So, if that sounds good to you, hit the likes and let's get into the video. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Hey guys, I'm Alessandro. In today's video, we're discussing whether or not the 𝗓𝗏𝗏𝗍 ecosystem has the potential to rerun the Virtual's playbook, because essentially they are copying and pasting exactly what has brought the success to Virtuals recently, and especially the Virtual's Genesis ecosystem. They're rerunning that playbook. Before we go into that, we need to understand different ways of tying value back to token holders. There's lots of ways that crypto projects tend to do this. Obviously, the first one can be number go up, right? The price of the token just going up. Bitcoin, good example. The tech means number go up. That is how token holders end up with more value. Another one is by staking, right? So Solana, for example, if you stake Solana, you earn staking rewards. Only stakers, though, earn these rewards. So if you do not stake Solana, you're paying that inflationary cost. You're losing to people who are staking. So you can number go up, you can have staking rewards. Another way is by just giving value to the ecosystem, participation in the ecosystem, almost like another way to reward stakers. The Virtuals ecosystem is like this, right? If you stake Virtuals, you're not really expecting the Virtuals price to go up. What you're hoping for is that you can get into their agent launches. All that means is, by staking Virtuals, it gives you a key to participate in their ecosystem. That key allows you essentially the Ponzenomics of being able to buy cheap agent tokens when they're launched. And that's where their recent successes come from, right? They've given people who've staked the ability to buy new agent launches when they're cheap. So I'm just going to quickly show you the Virtuals playbook, and then we'll get into the 𝗓𝗏𝗏𝗏𝗍 playbook afterwards. So this is Virtuals, right? And we can see that initially they were crushed. So if we go back from December, the high in sort of the start of January, they were down, 92% high to low from that position, right? Absolutely crushed. Then they decided, right, we're going to re-implement. And if you remember at the time, they were making a bunch of money. Agents that were launched on the platform were doing really, really well back in December. And then they went from earning hundreds of thousands of dollars a day to literally hundreds of dollars a day, if that. And then back in April, when the market sort of picked up, they decided, right, we're going to implement some kind of value accrual mechanism back to token holders. And the way they did this is they announced a Genesis launch, right? So back here you can see Genesis is now live on Base. They started this back in April. Yes, it coincided with the April lows in Bitcoin as well, so the market's been pretty good since then. But after announcing that particular reward mechanism for people who were staking, token price rallied 300% in just under a month, right? Then they launched a Kaito yapping program. So if you don't know what Kaito is a social fi platform where people on Twitter talk about different projects, and by talking about those projects, they get rewarded in the token of the project. So the project and Kaito team up. The project say, here's some tokens, distribute them to people who are producing the best content on our ecosystem or on our protocol. That alongside the actual launch of the Genesis sort of like agent launch, they happen on the same day, obviously to try and increase engagement, increase that sort of hype on Twitter around the platform. And since then, the Virtuals Virtuals has traded in like a 65% range. It's now down sort of 25% since that point. But here's the key. The value hasn't accrued to the token price. As we mentioned before, different token prices have different value accrual mechanisms. For example, Hyperliquid, their value accrual mechanism is buying the token on the open market, which has been very, very successful. So you have different value accrual mechanisms. You can have staking rewards where the supply continues to grow, and only It's an inflationary mechanism, but only people who are staking earn the rewards. You can have buys on the open market, like Hyperliquid. Everybody who holds the token thus gets those rewards. Or in the case of virtuals, they give you a key to participate in the ecosystem. So during this period, the token price has gone down, right? But that's because the key to participate in the ecosystem was what was driving value to holders. So if we go here, we can see value to holders was accruing to people who are participating in the ecosystem. This is the Genesis launch ROIs. Now, obviously some Genesis launches produce better results. The top one, 12,200%, what's that, 122x. The second best one is 8,800%, so 88x. Obviously ridiculous returns. The only way you can participate in these Genesis launches is by staking virtuals, and then you can buy these tokens at a 200k-ish market cap. So stake virtuals, you're able to buy these tokens real cheap. If the token price does, if the agent does well, obviously the returns are, you can see here, very, very strong. Now, the key here is you need to be able to participate in the best agent launches. So some kind of like good selection is key. You need to select the best launches. The ones that are oversubscribed tend to be the ones that do better. But if they're oversubscribed, it means your allocation is going to be less. And you need to make sure you're able to sell these tokens as well, right? And virtuals have like a GL thing where if you sell them, it's harder to participate in the next one. So it's not super easy to actually get all the value. And actually you're not going to get all the value because if you participate in a sale, in a token sale, and you're able to get in at 200k market cap, if you sell it, it's hard to do the next one. So it's like this kind of Ponzi where they're trying to encourage you to stake and never sell. Obviously, if you want to make money, you for sure need to sell somewhere along the way. Anyway, so that's how virtuals have done it. And CreatorBid have just launched a V2, they're calling V2 user dashboard, but all it is the same thing. They're going to ask people to stake their bid tokens. By staking bid, you earn points. These guys call it levels. You get different levels. The higher your level, the more of each new agent that's launched token you can buy. And that is their mechanism by which they're trying to generate hype around the platform. There's a few similarities, right, between the CreatorBid ecosystem and the virtuals ecosystem. And a lot of these things they're doing all of the same playbook, basically. So if we look at bid across here, we can see that they basically have done exactly the same thing as virtuals. They've implemented this tweet here. We're saying, hey, we're going to launch a V2 staking thing. Just like we saw with virtuals, they launched a V2 staking thing. And then this tweet here is them saying, hey, we're launching a 𝗙𝗃𝗍𝒑𝒻 program. Guess what? Virtuals also launched a 𝗙𝗃𝒍𝒑𝒻 program right here. And then right now, as of yesterday, the Genesis, not the Genesis, but the V2 staking mechanism by which now you can go and participate in these agent launches went actually live, just like virtuals did. They combined it with the yapping program to try and generate as much hype as possible, of course. So there's a lot of similarities, right? These guys ran 235% in 2 months, just over 2 months. But again, I don't think the value will accrue to the token price because that's typically not what we see, right? These guys are trying to accrue value back to people who participate in the ecosystem. Yes, ideally they want token price to go up, but probably you're going to see some kind of range bound play, just like we saw with virtuals. Remember we saw virtuals here, it traded in this range afterwards because the value isn't going directly to token holders. The value is going to people who participate in the ecosystem. So you can't benefit from these kinds of plays, in my opinion, in a good risk-adjusted way, unless you go out there and you actively participate in the ecosystem, doing the things they're asking you to do, staking tokens, buying and selling, yapping about it, all those kinds of things, right? And so these are their updated tokenomics. First of all, when you go in, this isn't updated, this has always been the case, on their platform there's a buy and sell tax. I don't really love buy and sell taxes really, but it does mean that each agent on the platform can build up a decent sized treasury. If we look at DKing, for example, sitting there with 220k in the treasury, because every buy and sell comes with a 2% tax, right? So you buy, you pay 2%, you sell, you pay 2%. Bit annoying as a trader, to be honest, but means the protocol makes a bit more money. It does disincentivize any sort of like wash trading and stuff, which, you know, is probably fine, but I'm going to speak about that in just a second. There is something interesting regarding that on the BNB chain at the moment, so they're not going to benefit from that too much. But the creator bid emissions are such that every 2 weeks they distribute 3.3 million bid tokens into the ecosystem, right? Now, that is supply side pressure. That is pressure that's coming out in the form of bid tokens, only going to people who are actively participating in the ecosystem. People who are staking, right? Emissions go to stakers on their bid level. So if you stake more, you get higher emissions. Obviously, that's always the case. They're also going to people who are like staking their agent tokens. And they're also going to people who, they call it endorsing, but it's kind of the same thing. It's staking your bid tokens, staking your agent tokens. So remember this on the token price, right? They're pushing out more and more of this supply all the time and only giving it to people who are actively participating in the ecosystem. Thus, if you do not participate in the ecosystem, users who don't do that are paying the cost of inflation, and they're giving that value to users who are doing that. In the case of something like Hyperliquid, if you hold a token, you benefit from the buybacks. In the case of something like this, it's a bit like Aerodrome. You only benefit from the emissions if you stake. It's that VE33 kind of model. You need to be staking, participating in the ecosystem to benefit. And remember, the benefit here is that, well, their idea is that A, you get emissions, but B, you are able to participate in the agent launches. Okay, cool. So there's like a convergence of like three things that are happening right now that might make this interesting. Number one, you've got the yapping program, Kaito yapping program on the bid ecosystem. Should mean that you see it all over like crypto Twitter a lot more than you have been seeing before. Number two, the actual launch of this staking V2, if it can produce some good returns, obviously that's good marketing as well. And number three, their main liquidity pool exists on BNB, and BNB is, if you look at this little light blue bar here, this is pancake swap volume. BNB is the dominant DEX at the moment because Binance have this ongoing Binance Alpha farming sort of thing where if you trade on BSC DEXs, you get rewards in BSC. You are able to participate in BSC token launches. So they've got this ongoing alpha thing, and essentially there's a bunch of wash trading going on the platform right now. That's a good thing for any token or any token on the platform that earns fees from trading. Now, probably no one's going to be wash trading the agents because there's a 2% buy sell tax, but there's a good chance that there's some wash trading done on a bid token, especially if it's sort of like up high in the ranking systems and there's a bunch of liquidity there, which, you know, there definitely can be. So those three things mean that right now is an interesting time to be paying attention to the ecosystem overall. The other thing that makes me think there's something interesting around this ecosystem, right, and potentially stands it apart from virtuals and gives it a good chance of doing something in the near term, is that CreatorBid have this sort of like infrastructure deal with BitTensor. They plug in all their agents, not all of their agents, but most of their agents. The APIs that are plugged in on their agents are tied to BitTensor subnets. So for example, if there was like any LLM, large language model, on the CreatorBid ecosystem, doesn't use ChatGPT for its inference, it's using a BitTensor version of ChatGPT, right? It's using APIs that plug into the BitTensor ecosystem. And this is interesting. And I'll tell you why it's interesting, because for a start, the biggest agents on 𝗏𝗏𝗏𝗏 right now are BitTensor agents. So you've got DKing, which is tied to subnet 44, Aeon, which is tied to subnet 6. These things are already BitTensor agents tied to subnets. They've got a bunch of like partnerships with Sturdy, subnet 10, DKing, subnet 11. Doesn't really matter, right? Fundamentally, these are BitTensor agents, BitTensor subnets that have a sort of like integration to 𝗏𝗏𝗏𝗏. And if we think like BitTensor is the future of decentralized AI, tying them into BitTensor means that they get the benefit of like, if there's ever a BitTensor season, these things are going to probably run, but they're actually able to get the best use of any kind of inference, any kind of data in the cheapest ways possible, because that's essentially what BitTensor is offering. The thing is about BitTensor, right? The thing is about BitTensor's subnets especially, is they're drowning under the unlock schedule. They're really struggling with the emission schedule of the network. Real quickly, BitTensor right now issues 7,200 tau per day. That tau is given to subnets, but whilst that tau is distributed to different subnets based upon how popular they are, essentially, those subnet tokens are also being pushed out into the ecosystem. Right now, subnets are inflating at a value of around 100 to sometimes even more, 200% per year in terms of their APY. So you can imagine that's a lot of sell side pressure or supply side pressure coming into the market. And what I've analyzed subnets that have ERC20 tokens applied to them, and what you can see is that basically, I know there's a lot of stuff on this table, but just give me 1 second. Subnets that have an ERC20, ERC20s are just tokens that exist on sort of like EVM chains. So ETH is an ERC20 token, you know, like Link is an ERC20 token, Aave is an ERC20. Doesn't need to exist on Ethereum, just EVM chains. Subnet tokens, subnets that have an ERC20 tied to them in some way, the value is going at the moment to the ERC20, not the subnet, because the ERC20 has not got anywhere near the same crushing supply side emissions that the subnet has. Now, I'm not saying that subnets are going to fail. I think probably there's a very good chance they do very well. The select few that succeed might do amazing, right? And if you partake in that, you simply, again, have to stake and do all that sort of stuff. But I think in the short term, the next sort of 3 to 6 months maybe, especially before the first BitTensor halvening, the subnets with ERC20s applied to them stand a much better chance to do well. And we can see here, Neural 3D is like a gaming subnet. They've got a token called Neural. The Neural token is 20x more valuable than the subnet. Flock as well. Flock are like a big, sort of like, there was a lot of hype around them a few weeks ago. They're an AI project. The ERC20 token is 17x more valuable than the subnet. Kaito, the ERC20 token on Kaito, 13x more valuable than its subnet. Pretty sure Kaito is closing their subnet down anyway. Infinite Games, which is subnet 6, their ERC20, Aeon, this is a 𝗏𝗏𝗏𝗏𝗏 agent, is 4x more valuable than its subnet, right? So you can see, typically at the moment, the value is accruing to the subnet. In the case of DKing, subnet 44, we're going to go into this in a minute. Again, this is almost one-to-one, but the key here is, if you look at the FDV on these subnets, the FDV is really high, right? So the FDV for subnet 44, $232 million. Enormous. Whereas the FDV on the ERC20 side is only 17 million. Remember, the price you pay for stuff is the FDV, because tokens come into circulation constantly. If you don't price things in terms of their FDV, especially if there's a constant supply side unlock, you just get drowned in emissions. And so this subnet 44 one, think about how hard it is for this particular price to sustain, $232 million, or how hard it is for this to go up relative to $17 million. So that's what I've been seeing. I've been seeing that the value tends to accrue to the ERC20, not to the subnet at the moment. I don't think that sustains for years to come, but I definitely think it sustains for months to come. And so these are just the agents that exist on CreatorBid right now. This is a BitTensor one, 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 this is a BitTensor one. So this is a BitTensor one. The ties are definitely there, right? Now, this is where it sort of all comes back. I think we might see, I agree with Jeff, some kind of like CreatorBid PMF era where it is mutually beneficial for subnets to release some kind of agent token because it's much better for them from a marketing perspective. A, because BitTensor is so complex, no one understands it, it's really hard to get into the subnets. So having some agent tied to your subnet means that you can actually go out there and sort of like do some marketing, generate some interest on your subnet, and actually do things that are really, really useful, right? You can take the data that the subnet's creating and go and do something useful, like in the case of DKing. DKing, this is its Twitter. It's tied to Subnet 44. Subnet 44 trained this model, right? This model learnt from Subnet 44, and all it learnt was it watched football matches, and now it makes predictions on football matches. It tries to find matches that it thinks, or opportunities that it thinks are positive expected value. And just to give you some crazy things that it's called recently. So yesterday it said Flamengo to beat Chelsea. Guess what? Flamengo beat Chelsea, right? And that was an underdog call. So they were, in this case, it said, we think the underdog's going to win. That's the best expected value bet. They won. The day before that, it was saying that it thought Inter Miami would beat Porto, again, calling for the underdog to win. Guess what? The underdog won. Inter Miami won. Another one which was crazy, not crazy to be honest, it's just going out and finding these positive EV bets. Real Madrid versus Al-Hilal, it thought both teams are going to score. That being priced at 62% was too good value, so again, said, here's the bet. It was correct. And this one's actually crazy. There was a game between Chelsea and, I don't even know who 𝗨𝗚𝗏𝗄 are, but it made 8 sort of like recommendations that were positive EV on the game, and it made 10, sorry. 8 out of 10 were winners. I mean, it's crazy, right? Total profit 52%, probably better than crypto's gains at the moment. So, very interesting use of the BitTensor subnet. They've gone out and created an agent that allows people to make bets based upon the inference and the data points that the subnet is capturing, right? And that's where this sort of all boils back to. It's saying, right now, there's a chance for the bid ecosystem to do quite well, potentially, with these agent launches. But I think where the value truly comes is if they are the place where BitTensor agents are being launched. Now, if we can see more of these BitTensor agents being launched, and that there are more subnets that are very likely to implement or introduce some agent based upon the data that subnet's creating, again, the reasons are it's good for marketing purposes, gets the name out there, and it also means that the subnet is doing useful stuff and producing work that it's benefiting from the work that the subnet's doing. The agent can go and utilize that, whether it's a prediction model, whether it's betting on sports, whether it's predicting who's going to be the president next, doesn't matter. These are actual product market fit agents that have got being trained on some of the best data in the world by an enormous sea of miners that are producing incredible work, right? So that's where it all sort of comes down to. And I think if they can get if those agents are launched on the CreatorBid platform, which essentially they need to be, if you can only launch agents on the CreatorBid platform if you the only agents that can be launched on that launchpad are, you can only launch agents on that launchpad if you open it up to people who are staking bid, right? So if more of these BitTensor agents launch on that launchpad, people who are staking bid get first access to that. So that covers that. Anyway, any questions on that, please just leave a comment below. I'll endeavour to get back to them. Otherwise, please, if you can, leave a like, leave a comment. I hope you enjoyed the video. Thank you ever so much for watching, and I shall see you in the next one.